Good evening. Please come to one next question 13. Right there, continuing with the above example but with one more information. So, write in that first table, right hand side rupees, goodwill 14,000, machine 1 50,000, machine 2 40,000, machine 3 30,000, conveyor belt 10,000. Total assets of CGU 1,44,000. Next line it is written, the CGU suffered an impairment loss of rupees 40,000. Some more information about the impairment of individual asset. Write little fast. Right hand side, write down machine 1, machine 3. Machine 1 and machine 3, they have given you the individual data also. So it is possible to calculate the recoverable amount. Write down fair value less cost to sell 45,000, 20,000. Value in use 43,000, 23,000. Required, this is written, determine how the impairment loss is allocated. Calculate the revised carrying value of the assets of the CGU. Now first, there are total 5 assets including goodwill. You can calculate the recoverable amount of individual assets 1 and 3. So first you test 1 and 3 for impairment. Find out the impairment loss on machine 1 and machine 3. So write in the notebook, step 1, calculation of impairment loss of machine 1 and machine 3. Calculation of impairment loss of machine 1 and machine 3. Right hand side 2 columns, machine 1, machine 3. Right? And then first we will write down recoverable amount. Very easy problem. So no need to explain much. Recoverable amount, higher of the two, fair value and value in use. So you will find for machine 1, fair value 45,000 is higher, okay? And for machine 3, the value in use 23,000 is higher. So 45,000 and 23,000 write directly, and carrying amount write 50,000 and 30,000. Both machines are impaired. Both machines are impaired. So write down point number C, impairment loss, machine 1, 5,000, 50 minus 45. Machine 3, 30 minus 23, 7,000. So total of these two machines is 12,000. The problem says that CGU has suffered an impairment loss of rupees 40,000. Is it right? So now write down impairment loss remaining is 40,000 minus 5,000 minus 7,000. That is 28,000. This 28,000 now I will have to allocate over goodwill and the other assets. So write down working note 2, impairment loss of goodwill. Impairment loss of goodwill. Right hand side rupees. Point number A, remaining impairment 28,000. Point number B, allocated to goodwill 14,000. And then impairment loss still to be allocated is 14,000. Impairment loss still to be allocated is 14,000. Now how much is remaining? 14,000. So in the next step what we will do? Step 3, rupees 14,000 is now split on a pro rata basis. 14,000 will be split on a pro rata basis between machine 2 and conveyor belt. What is their balance? Point number A. Balance, right? 40,000, 10,000. 4:1. 4:1. Point number B. Proportion of impairment allocation. In bracket 4:1. 14,000 in the ratio of 4:1. How much? 11,200. 2,800. 11,200 and 2,800. Done. One last answer, Steph. Next, value after impairment loss. The value after impairment loss. These are the assets. These were their carrying amount before impairment loss. This is impairment loss allocated, and this is value after impairment loss. Write down. Goodwill, machine 1, machine 2, machine 3, conveyor belt. Carrying amount before 14,000, 50,000, 40,000, 30,000, 10,000. Total 1,44,000. Impairment loss allocated 14,000, 5,000, 11,200, 7,000, 2,800. Therefore, value after impairment 0. Goodwill will become 0. Machine 1. How much machine 1? 45,000. Machine 2. 28,800. Machine 3. 23,000. Conveyor belt 7,200. Total 1,04,000. In this example, first we will allocate the impairment loss to those assets whose recoverable amount can be calculated. Okay. Then goodwill. Then pro rata to other assets. Now, dear student, solve question number 14. Simple question. There are 3 assets in a CGU with carrying amount of rupees 6 lakh, 12 lakh, 9 lakh respectively. Recoverable amount is 18 lakh. How will the impairment loss be treated in this case? So first check whether there is impairment. Total carrying amount 6 plus 12 plus 9, right? 27. Carrying amount of CGU in last column 27. Recoverable amount of CGU last column 18. Impairment loss 9. Impairment loss 9. CA write 27, RA 18, IL 9, and then you write a note. Treatment of impairment loss. Reduce the value of the asset in the ratio of 6:12:9. That is, how much you will allocate to first asset? 2. Second asset 4, and third asset 3. 2:4:3. 2:4:3. That was oversimplified problem. Okay, done. In this question there was no goodwill. Just simply allocate the impairment loss in the ratio of carrying amount. Since no other information is given, we will assume that after allocation of impairment loss, carrying amount will not be reduced below the higher of the following 3. Which 3? Value in use, if determinable, fair value less cost to sell, if determinable, and 0. And then impairment loss will be transferred to P&L account. Another assumption is that these are not revalued asset. If these were revalued asset, then we will first allocate the impairment loss to revaluation reserve. Right. Next topic is corporate assets. Corporate assets do not generate cash flow. So therefore their value in use cannot be calculated. They assist other CGUs in the cash generation. So now if you have to test the corporate asset for impairment, then you have to allocate it to the CGU. You have to allocate it to the CGU to which they have rendered the service and then compute the impairment loss. Okay. So if you can allocate it on reasonable basis, then first allocate the CA to CGU. CA means corporate asset to CGU and then provide the impairment loss. So how will you do it? See, there is a CGU carrying amount 100. There is a corporate asset allocated to this CGU on a reasonable basis 50. So in case if you will allocate, then I will first calculate total carrying amount and then recoverable amount. Suppose recoverable amount is how much? 120. 120. Is the asset impaired? So impairment loss will be 30. Right? How will you allocate it? We'll allocate it to CGU and corporate asset in the ratio of 2:1. 150, 2:1. So CGU allocate impairment loss 2/3 into 30, 20, and corporate asset 10. It is different from goodwill treatment. In case of goodwill, first we will allocate it to goodwill, right, and then to the CGU. But here we will allocate it proportionately. Now to understand this, we'll just solve one more question. Check this question. Is it there? An entity has two cash generating units, X and Y. There is no goodwill within the units carrying value. Carrying values are 10 million and 15 million. Entity has an office building that has not been included in the above values and can be allocated to the units on the basis of their carrying values. The office building has a carrying value of rupees 5 million. The recoverable amounts are based on value in use of rupees 9 million for X and 19 million for Y. Now you solve this problem. Determine whether the carrying values of X and Y are impaired. So how many total number of assets are given in this question? 3. CGU X, CGU Y, and an office building. And what is the basis for allocation of office building? Carrying value of X and Y. So first you allocate. Take the total. Compare with recoverable amount 9 and 19. And then compute the impairment loss. Check the answer now. Carrying value of X is 10, Y is 15, total 25. Office building 2, 3, total 5. After allocating office building, the carrying amount is 12 and 18. Recoverable amount is 9, 19. Which one is impaired? X is impaired because in case of X, recoverable amount is less. Y is not impaired. So Y impairment loss is 0. Now write one more note below if it is not written. Impairment loss of 3 will be allocated to CGU X and office building in the ratio 10:2. That is, now calculate 10 by 12 into 3. How much is 10 by 12 into 2.5 and 0.5 respectively. So impairment loss will be allocated 2.5 and 0.5 respectively. Next is, in the next paragraph in that same place, if the corporate asset cannot be reasonably allocated to the particular related CGU, then the related CGU shall be tested for impairment excluding the corporate asset. And the group of CGUs to which the corporate assets can reasonably be allocated are identified and the group is tested for impairment. So what they are saying, if you can't allocate the CGU, allocate CA, corporate asset, to CGU, test the CGU for impairment without allocating corporate asset, and then you find out that higher level of group of CGU to which the corporate asset can be reasonably allocated, and the group of CGUs will be tested for impairment. So if you can't allocate it to this CGU, go to higher level, go to higher level, go to higher level, till you will come a layer to which corporate asset can be reasonably allocated, and then this will be tested for impairment. So now we'll solve one question which is printed towards the end. Search for this question. Is it 40 number? Say yes. Yes. Question number 40. So this is little lengthy question. Potential question for 8 marks to 10 marks. Maybe more, 20 marks also. ABC Limited has 3 CGUs. Or it will be part of a bigger problem. ABC, the carrying amount of which as on 31st March 20x1 are as follows. Cash generating unit ABC, carrying amount rupees in crore, 500, 750, 1100. Remaining useful life 10, 20, 20. ABC Limited also has 2 corporate assets having a remaining useful life of 20 years. Corporate asset X, Y, carrying amount 600, 200. Remark, the carrying amount of X can be allocated on a reasonable basis, that is pro rata basis, to the individual CGU. The carrying amount of Y cannot be allocated on a reasonable basis to the individual CGU. Recoverable amount as on 31st March 20x1 is as follows. Unit ABC and the whole company ABC Limited. Why do you think this whole company ABC Limited recoverable amount is given? For applying the impairment testing on corporate asset Y. Y cannot be allocated, so the whole entity will become a CGU for Y. Compute the impairment loss if any. Okay. Now in this question, first we'll have to compute the impairment loss. First we'll have to compute the impairment loss of ABC. Okay. So understand the answer. The answer is printed in your book, don't worry. So step 1, calculation of impairment loss. Understand slowly, because this requires understanding of the entire chapter. How many units are there? 3. A, B, C. First point number A, carrying amount of individual units. Is it 500, 750 and 1100? And what is their useful life? 10 year, 20 year, 20 years. Now the problem is how to allocate the carrying amount of CGU over this ABC. The question says the carrying amount of X can be allocated on a reasonable basis, that is pro rata basis. Normally what I would have done, I would have allocated in the ratio of carrying amount, but their useful life is also different. So I will give weightage to both the factors. So I will first calculate here weights. Weight will be A into B. The purpose of this weight is to calculate the ratio. So what we will write here, 500 into 100, 5000, 5000. 750 into 20 is how much? Is it 15,000? And this 1100 into 20, 22,000. Which means my ratio will be 5:15:22. So in point number D, we will write X allocated to A, B and C in the ratio 5:15:22. So dear student, tell me 600 allocated in this ratio, how much will you get? 600 into 5 by 42. 600 into 5 by 42. Yes, come on. Okay, write 72, round off. Then 15 by 42 into 600. 216, round off. Very good. And the last one, 312, balancing figure. You can take it as a balancing figure. Now understand, this is the carrying amount of CGU. This is the corporate asset allocated. So my point number E will be carrying amount after allocation of CGU X. You will add A plus D. So this is 572. 572 is right. 500 plus 72 without calculator, 572. 750 plus 216. 966. 1100 plus 312. This is their carrying amount. They have given recoverable amount also. So one good thing they have done, they have given you recoverable amount. In some exam questions, they don't give you recoverable amount. In that case, you will have to compute it first by just preparing a small working note, fair value less cost to sell and value in use. And if value in use is not given, then that also you have to first calculate. So that you know, recoverable amount is in the question 600, 900 and 1400. So then we will write impairment loss. We'll just check whether impairment loss is there or not. First one, the carrying amount is less. Recoverable amount is more. No impairment. Be careful. Every time you will not have impairment. Here there is an impairment 66. and here there is an impairment of 12. Okay. Point number H, allocation of impairment loss. Allocation of impairment loss under the two parts, to CGU and second to corporate asset X. To corporate asset X. Now how to present it? What is my impairment loss in this case? Nil nil. First one, nil nil, ignore. This 66 we have to apportion in the ratio of 750 is to 216. So take on your calculator, 750 divide by 966 into 66. Is it 51? And for corporate asset, 216 divided by 966 into 66, 15. Or if you don't have time, take it as a balancing figure. Try this one also. 1100 divided by 1412 into 12, 9. Balancing figure 3. 3 will be allocated to corporate asset X. So now understand the total impairment loss allocated to corporate asset X is 18. Right? Okay. Now which asset has to be tested for impairment? Y. Corporate asset Y. For that we have to take the whole enterprise as a CGU. A, B, C. X, Y total. So now we are testing the corporate asset Y for impairment. Okay, answer is printed in your book. So first we will write again carrying amount originally given in the question. 500, 750, 1100, 600, 200, 3150. First you deduct the impairment loss as per step 1. Step 1 A0. For B how much was that? 51. For C how much was that? 9. For X how much was that? 18. Dash total 78. Is it 78? First you have to deduct it and then you write down revised carrying amount after step 1. 500, 699, 1091, 582, 200, 3072. And then you write down recoverable amount of entire entity. How much is given? 3200. So is there any impairment loss after considering this recoverable amount? So write down no, not applicable, nil. Now the next part of this chapter is reversal of impairment loss. Reversal of impairment loss for individual unit. And then we will see reversal of impairment loss of CGU also. Right? Can we reverse the impairment loss of individual unit? Does the standard allow you to do that? Yes, it allows you. When will you think about reversal of impairment loss? When the recoverable amount has gone up. Right? How do you know the recoverable amount has gone up? Indication. Look for indication. While walking on the road, look for indication. While walking in the corridor of the office, look for indication. Some indication can come from external source. market sources. Some can come from within the organization. So in your notes, let us go through it quickly. What we learnt in the previous lecture, this is exactly opposite of it now. Market price of the asset has increased significantly. Yesterday building value had gone down. Now the same building, when I read the newspaper today, the real estate values have increased in this area because a new project is coming up that will create demand for the real estate. Sit down, calculate recoverable amount, and if the recoverable amount is higher, then check can we reverse the impairment loss and to what extent. Second, there is a favorable impact. There is a favorable impact in the technological, market, economic or legal environment in which the entity operates. So some example we'll quickly take. Yesterday you were manufacturing a mobile phone. Technology had changed. So you provided impairment loss. But what the companies do? The smart companies will quickly adopt the new technology, right? And again the value in use will go up. Taste, fashion always take U-turn, okay? And again the demand for your product has gone up. Now the economy is recovering, growth rate has increased, we are into boom phase, and the legal environment has also become favorable. What the government had done? They had banned the cigarette, they had banned the liquor, but the new government says we will not interfere. New government says we will not interfere in the consumption habit of individuals. Give them freedom. Is it right? Let them drink, let them smoke, let them enjoy. Who are we to interfere in what they want to consume? In the process, we are losing the GST also, tax also. At least the tax can be recovered and that can be used for development. So this is the thinking of this modern government. So the company which was manufacturing wine, cigarette, their value in use will go up. Yes or no? So at least now they will sit down and calculate the recoverable amount. Then market interest rate has decreased. So you open the newspaper in the morning, RBI has announced a decrease in interest rate by 0.5%. Lower the discount rate, higher the present value. Lower the discount rate, how does it affect you? Your value in use will go up. If you use a lower discount rate, this is the relationship between discount rate and present value. So if discount rate moves on this side, the value in use will move north side, go up, right? Lower the discount rate, higher the present value. And one more thing, your market capitalization has exceeded the carrying amount of the net asset. Market capitalization has exceeded the carrying amount of net asset. So market now have understood the value of your net asset is much more than the book value. So these are indications. And what are the external internal indicators? One is there is a significant favorable impact, or there will be a significant favorable impact in the manner in which the asset is used or will be used in the future. So company may do restructuring of the asset. Earlier there was only a plan of restructuring. Now the restructuring has been done. Company may have repaired the asset if it has got physical damage. So therefore this will favorably impact the way the asset will be used. Then MIS, Management Information System, MIS, Management Information System, sales, budget 1000 unit, actual 2000 unit, capacity used, budget 80%, actual 90%. Just example. What does this ratios indicate? This internal reports indicate that your performance is improving and therefore value in use may have gone up. Right? Welcome to reversal of impairment loss. So now what you do, once you get the indication, sit down calmly and again calculate 3 numbers now. Calculate 3 numbers. Which 3 numbers you will calculate? 3 numbers I said. Carrying amount at present. Present carrying amount. That means up to the date of reversal, find out what is the book value. Then you calculate recoverable amount. And you calculate one more thing, carrying amount. If the asset had not been impaired. So you do a out of the books calculation and check, if I would not have provided impairment loss some years ago, today what would have been the carrying amount? Is it right? So now let us put some number to check. Suppose your current carrying amount is 100, recoverable amount is 150. If you would not have provided impairment loss, just again go back to the year 0, you purchase the asset and keep providing depreciation as per the original plan and find out how much would have been the carrying amount today. So your accountant says, had we not provided the impairment, today the carrying amount would have been 120. Now my question is, how much you can reverse here? So the standard says the maximum you can reverse should be such an amount that after reversal of impairment loss, the carrying amount should not exceed. The carrying amount should not exceed the lower of the following two. Lower of the following two, recoverable amount and carrying amount if impairment loss had not been provided. So my answer would be, I can reverse only 20. I can reverse only 20. Change the example. Suppose recoverable amount is 110 instead of 150. Carrying amount would have been 120. Now how much I can reverse? I can only reverse up to 10. Okay, so that is very simple calculation. Now what about the accounting treatment of reversal of impairment loss? The accounting treatment of reversal of impairment losses, it will be recognized in P&L account if it is not a previously revalued asset. And if it is a previously revalued asset, then what you will do? Now go back to yesterday's one journal entry I had written. Yesterday's entry. Final effect. Revaluation reserve debit. P&L account debit to accumulated impairment loss. This was the entry. Now reverse it. Accumulated impairment loss. How much you want to reverse? First you calculate that. And which two will come first? P&L account or revaluation reserve? So you are reversing. So first this will come, then this will come. So to P&L account. But how much? Maximum amount that you will reverse in P&L account is the amount that was debited earlier. Suppose earlier we had written like this: revaluation reserve 30, P&L account 10, impairment loss 40. So now if I have to reverse, say only 15. So 15, 10 will go to P&L account and 5 will go to revaluation reserve. Okay. So it is written that in case if an asset was previously revalued, the reversal is first used to recover the amount previously debited to P&L account on providing the impairment loss, if any, and the remaining is treated as an increase in revaluation surplus. Next question, what about depreciation? Will it increase or decrease after reversal? After reversal of impairment loss, depreciation charge per annum will increase because your carrying amount has increased. This paragraph is for CGU, reversal of an impairment loss for CGU. Same logic you will apply. You will compute the current carrying amount of CGU, compute the recoverable amount of the CGU, and then you have to allocate the reversal of impairment loss. But while reversing the impairment loss, you have to ensure that carrying amount of the asset should not exceed the lower of the following two. Same, recoverable amount, if determinable, carrying amount that would have been determined net of amortization or depreciation had no impairment loss been recognized for asset in the prior period. Okay. What about reversal of impairment loss for goodwill? In this standard, there is no situation when you are allowed to reverse the impairment loss on goodwill. So prohibited completely. In accounting standard 28, reversal on goodwill is allowed if two conditions are satisfied. But that is in IAS 28. Accounting standard 28 issued by Institute of Chartered Accountant of India. Here not allowed, so forget. Now we'll write one example. No, example is printed. 16 number, but solution you have to write. Solution is not given. Wonderful. But the solution will require little more space. So write in a small font. First understand the question. X Limited acquired a plant on 14/20/10. Cost is 200. Useful life 20 years. Residual value 20 lakh. Depreciation policy straight line method. As on 31st March 2013, the company determined that the recoverable amount of the plant is rupees 100 lakh. So impairment loss was recognized. Then on 31st March 2016, based on the positive information, the entity reviewed the recoverable amount and redetermined at rupees 150 lakh. Oh, the recoverable amount has gone up. Find out the amount of impairment loss and find out the impairment loss reversal. So would you like to try your luck? First tell me how much would be the impairment loss. That is easy. Find out the carrying amount after 3 years. 200 minus 20 divided by 20 years. So per year depreciation is how much? 9 lakh. And how many years are over? 3 years are over. Means you have provided in 3 years time 27 lakh rupees of depreciation. So carrying amount is 173 lakh after 3 years. And the recoverable amount is 100 lakh. So have you computed the impairment loss of 73 lakh? Yes or no? So write down up to that first. write down up to this. First you will write down annual depreciation. Just write annual depreciation. 200 minus 20 divided by 20 equal to 9 lakhs. Okay. Next line. Accumulated depreciation for 3 years. Accumulated depreciation for 3 years. 9 into 3, right? 27 lakh. Next line, right? Carrying amount as on 31st March 13. Carrying amount as on 31st March 13. 200 minus 27, write 173 lakhs. Use small font. Then write impairment loss is equal to 173 minus 100 equal to 73 lakh. Equal to 73 lakh in bracket charged to P&L account. Charged to P&L account. Next line. Revised annual depreciation. Revised annual depreciation per annum 100 minus 20 divided by 17 years equal to 4.706 lakh. Next line. Accumulated depreciation at the end of 31st March 2016. Accumulated depreciation at the end of 31st March 16. 4.706 into 3. 14.118 lakh. Therefore, carrying amount as on 31st March 16. Therefore, carrying amount as on 31st March 16, 100 minus 14.118 equal to 85.882 lakh. So right now my one figure I have got 85.882 lakh. Recoverable amount is given in the question 150. But one more calculation we'll have to do. Next line, write down carrying amount if impairment loss was not provided. Carrying amount if impairment loss was not provided equal to, now remember how much we have charged every year, 9 lakh. So my carrying amount today would have been equal to 200 minus 9 into 6. 9 into 6 means for 6 years, this is depreciation we would have charged. So how much it comes to? Is it 146 lakh? Now first you understand which path you will choose. Your present carrying amount is 85.882. 85.882. You are standing here. You are looking in front. There are two paths. One path leads to 150. One path leads to 146. Which path you will choose? The path which leads to the lower of the two, 146. Take the difference. 146 minus 85.882. So you will write reversal shall be restricted to 146 minus 85.882. 60.118 lakh rupees. Is it right? This is how you have to do the calculation. Any question can come in any form. Now write down journal entry. If you want to write journal entry, plant account debit 60.118 to reversal of impairment loss 60.118 and reversal of impairment loss debit 60.118 to P&L account 60.118. You can pass one entry also. plant account debit to P&L account 60.118, or accumulated impairment loss account debit to P&L account 60.118. Done. So this is a good example of how you deal with impairment loss of individual asset. Same logic applies to CGU also. Is it right? So dear students, solve one next question printed below. Is the solution also given? Check. So nice. Not given. Then solve. First read the question. The calculation refers to impairment loss suffered by Z Limited on 31st December 20x4. Goodwill net asset total. Carrying value on 31st December 20x4 300, 900, 1200. Impairment loss is total 500. What they have done? They have first allocated to goodwill 300, then to net asset 200, and therefore the carrying amount now is 0, 700 and 700. Then there is a note. There has been a favorable change in the estimates of the recoverable amount of Z's net asset since the impairment loss was recognized. The recoverable amount is now rupees 800 million at 31st December 20x5. The net asset carrying amount would have been 720 million on 31st December 2000x5. Assets are depreciated at 20% on reducing balance. Show the accounting treatment for the reversal of the impairment loss of 31st December 20x5. So solve yourself. First you have to find out what is the carrying amount on 31st December 20x5. 3 numbers I require. So what is the carrying amount? Goodwill will be 0. Goodwill is already written off and it can't be reversed. The carrying amount, write down 700 minus 20%. 560. Total 560. And what are the two numbers given to you on 31st December 2005? Recoverable amount 800. Carrying amount, if there was no impairment, 720. So from 560, I'll move to 720. So to move to 720, how much impairment loss will be reversed? 160. So the carrying amount after reversal of impairment loss will be 0, 720, 720. Is it right? And there is a note. Reversal of impairment loss for goodwill is prohibited. Solve this question also. It is there, 18 number. Yes or no? Answer is also not there. Good. At least you will pay attention more. At the end of the year 2020, A Limited acquired assets of B Limited at a price of rupees 90 lakh. The fair value of the asset was estimated to be 75 lakh. It is to be depreciated over 10 years from 2021 onward. Goodwill will be amortized over a period of 5 years. In the beginning of 2023, a new government was voted to power. This government immediately announced some policies by which the main activity of A Limited were severely affected. And by the end of 2023, the company identified the indications for impairment, and the recoverable amount of this asset was estimated at rupees 49 lakh. So then first you have to provide the impairment loss at the end of year 2023. And during the year 2025, means after 2 years, government adopted liberal policies which are expected to improve the working position and profitability of A Limited. The recoverable amount at the end of the year 2025 is estimated to be rupees 40 lakh. Find out the impairment loss in 2023 and reversal of impairment loss and its treatment in the year 2025. So write down in the first table, write step 1. Calculation of impairment loss in the year 2023. Ready? Start. Point number A. Cost of acquisition. Total consideration paid is 90 lakh. Out of that, identifiable asset 75 lakh. Goodwill 15 lakh. Now in this question there is a wrong thing, but you have to follow because it is given. If it is given, then you follow, otherwise ignore it. Goodwill was amortized over a period of 5 years. If it is given, follow. If it is not given, ignore it. Okay. So if you want, we can ignore it also, but then whole my answer would will change the answer. Oh. You change the question, you make the total price of the asset is 81 lakh. Make it 81 lakh. 81 lakh. Sorry, not 81. You make it 84 lakh. Also 81 is okay. Happy? So goodwill will be 6 lakh. And we will not provide amortization of goodwill. So goodwill is 0. Just make a change in the question. Student suggestion is, why do we need to provide amortization on goodwill? So change the question slightly, make it 81 lakh. Fair value of the asset 81 lakh. 81 minus 75, 6 lakh goodwill. Then write down next line, less depreciation for 3 years. Less depreciation for 3 years. 75 lakh divide by 10 years into 3. 75 lakh divided by 10 into 3. Is it 22 lakh 50,000? Point number C, write down. Carrying amount at the end of 2023, 6 lakh is right, 6 lakh, 52 lakh 50,000 and 58 lakh 50,000. Next line, write recoverable amount. Recoverable amount at the end of 2023 is given in the last column, write first 49 lakh. Then write impairment loss in the last column first 9 lakh 50,000. 9 lakh 50,000. Out of 9 lakh 50,000, 6 lakh you apportion to goodwill and 3 lakh 50,000 balancing figure apportion to asset. Okay. So therefore revised carrying amount, goodwill 0, asset 49 lakh, total 49 lakh. Now we'll go to provide depreciation for 2 more years. So depreciation in year 2024 and 25 for 2 years, 49 lakh divided by 7 years into 2 years, 14 lakh. Therefore carrying amount at the end of year 2025, 35 lakh, total 35 lakh, correct? Goodwill has already been written off. Goodwill impairment loss is not reversed. Now dear student, my question is, what would be the reversal of impairment loss? So write down, first you write down carrying amount at the end of 2023. What was the carrying amount before impairment loss? Before impairment loss of the asset, 52 lakh 50,000. Is it there? Then we would have provided depreciation on original value for 2 more years. So 7,50,000 into 2, 15 lakh. Therefore, carrying amount, had there been no impairment, 37,50,000. This is one number. Recoverable amount at the end of 2025, 40 lakh. Another number. Carrying amount after providing impairment loss at the end of 2025, 35 lakh. So from 35, which direction I will take? 37.5 or 40? Will go to that number which is lower of the two. So therefore reversal of impairment loss 37,50,000 minus 35 lakh is 2,50,000, and therefore revised carrying amount is 37,50,000. Noted? One more question. Search for this question in the list of practice question. Is it there? It will be there towards the end. Question number, I think 44. Just check. 44 is there. Question number 44. A Limited purchased an asset of rupees 100 lakh on 1st April 20x0. It has a useful life of 4 years and no residual value. The recoverable amount of the asset is as follows. March 31, 20x1, 60 lakh. March 31, 20x2, 40 lakh. March 31, 20x3, 28 lakh. Calculate the amount of impairment loss. Calculate the amount of impairment loss and its reversal if any. And its reversal if any. As on 31st March 2000x3. Okay. So let us check each year whether there is any impairment loss or not. At the end of year 1, what will be the carrying amount? 100 minus depreciation, 100 divided by 4. Is it 75 lakh? And what is recoverable amount? 60. So impairment loss of 15. So revised carrying amount is 60. And number of years remaining are 3. Then year 2. Carrying amount at the end of year 2. 60 minus 60 by 3. 3 years are remaining. 20. Recoverable amount. This is 40. 60 minus 20, 40. Recoverable amount is also 40. Okay. No impairment. No reversal. Okay. Year 3. Year 3 carrying amount. We will start with 40 minus 40 divided by 2 or 60 divided by 3, whatever. How much is that? 20. Oh. Recoverable amount is 28. But don't say reverse 8. Don't be in a hurry. Check. Carrying amount, if there had been no impairment loss. If you would not have provided impairment loss today, the carrying amount will be 100 minus 100 by 4 into 3. That is 75 you would have provided depreciation. So 25 will be the carrying amount. If you would not have provided this impairment loss here, today this assets carrying amount will be 25. So from 20, we'll move to lower of the two, 28 or 25. So reversal. How much is reversal? 5 or 8? 5. Okay. So now the answer is there. You can read it later. This way you have to be careful, otherwise you will write 8. Now we'll come to disclosures. Disclosure requirement in the financial statement. The impairment loss that you have provided. So this will come to your statement of profit and loss. And reversal recognized in profit or loss and other comprehensive income. Other comprehensive income you will show for revaluation reserve. Okay. When you are going to provide impairment loss for a revalued asset, you are going to reduce the revaluation reserve, will be presented in OCI. When you reverse the impairment loss, and in case if you credit revaluation reserve, it will be presented in OCI. The disclosure shall also be given for each reportable segment for entities that report segment information. So in case if you are preparing segment information, then for segment also the disclosure will be given in case any asset of segment is impaired. In the notes with regard to CGU, the allocation of goodwill, indefinite useful life asset, assumptions involved in estimating recoverable amount, methodology used to determine fair value less cost to sell, any goodwill or intangible with indefinite useful life allocated to multiple CGU. So these are the disclosure requirement in the notes. And one more last question we will solve, which is a very comprehensive question. Search question number 38. Okay. 38 number question is a combination of two chapters, business combination and impairment. Okay. Sun Limited is an entity with various subsidiaries. 38 number. The entity closes its books of account at the every year ended on 31st March. On 1st July 20X1, Sun Limited acquired an 80% interest in Pluto Limited. Details of the acquisition were as follows. Sun Limited acquired 8 lakh shares in Pluto Limited by issuing 2 equity shares for every 5 share held. Dear student, tell me what is the number of share issued? 2 upon 5 into 8 lakh. Hanji. 2 upon 5 into 8 lakh. 3,20,000 shares were issued. The fair value of the Sun Limited share on 1st July is 4 rupees per share. Multiply by 4. So this is the fair value of the consideration transferred. 1280. Memory plus. And the fair value of the Pluto Limited share was 1.40 per share. Now this will be required for calculating the value of non-controlling interest. Just wait a minute. One more thing I have to ask you. Sun Limited acquired 80% interest. 80% interest represent 8 lakh share, which means non-controlling interest will be 20%. Their number will be 2 lakh. 80% 8 lakh. 20% 2 lakh. 2 lakh into 1.4. So that will give you fair value of non-controlling interest based on market price of Pluto Limited share. How much? 280. 2 lakh into 1.40. Now, one more thing. The cost of issue was 5%. Now, this line is not useful to us in this chapter. In business combination, IFRS 3, you will learn that all acquisition related costs are charged to P&L account. They will not form part of consideration. They will not form part of consideration. So this will not affect my goodwill. So my total consideration paid, you said, was 1280, and plus non-controlling interest you said 280. So 80% plus 20%, what is the total right now? 1560. Keep in your calculator 1560. Cost of issue will not form part of consideration paid. Similarly, the cost incurred for legal and professional fees will also not form part of consideration paid as per IFRS 3. So these two figures you have to ignore. The fair value of the identifiable net asset of Pluto Limited on 1st July was measured at 1.3 million. So this is the fair value of the asset acquired. So your calculator is right now showing 1560. That is rupees in 1000 minus 1300. How much is that? Goodwill 260. Are you getting goodwill 260? Yes or no? 1560 minus 1300, goodwill 260. Sun Limited measured the non-controlling interest in Pluto Limited at fair value. They use the market value of Pluto Limited share for this purpose. Means this figure 1.40. 1.40 into 2 lakh already calculated. No impairment of goodwill arising on acquisition of Pluto Limited was required on 31st March 2002. 31st March 2003. Very good. Pluto Limited comprises. So they acquired Pluto. Now up to this your IFRS 3 was getting applied. And we got a goodwill of 260. Okay. So now goodwill has come and then we are testing for impairment. First and second year no impairment. Now the problem further says comprises 3 CGU ABC. When Pluto Limited was acquired, the directors of Sun Limited estimated that goodwill can be allocated to unit ABC in the ratio of 2 to 1. The carrying value of the units in this CGU and the recoverable amounts are as follows. Now here this standard IAS 36 will be important. You have a goodwill of 260 and now they found that the CGU's carrying amount before goodwill allocation is 600, 550, 450 and after recoverable amount is also given. Look at it carefully. If recoverable amount is given, then first you apply impairment testing before allocation of goodwill. Which CGU has impaired? C, because C's recoverable amount is less than carrying amount. So before we allocate goodwill, I'll first provide impairment loss on unit C equal to 450 minus 400 equal to 50. Question number 1. Compute the carrying value of goodwill arising on acquisition of Pluto Limited in the consolidated financial statement of Sun Limited on 31st March following the impairment review. Compute the total impairment loss arising as a result of impairment review, identifying how much of this loss would be allocated to NCI. Oh, so there is an impairment loss. And if you have calculated NCI using fair value of share, then the impairment loss will be allocated to parent and NCI proportionately. If you calculate NCI using net identifiable asset, then the entire impairment loss will be allocated to parent company. Okay. So dear student, first you understand step 1, goodwill. Some knowledge of IFRS 3 will be required here. Cost of acquisition 8 lakh into 2 by 5 into 4 rupees per share. 1280 figures in thousand. Fair value of NCI, they have specifically given valued on the basis of fair value of share of Pluto 2 lakh into 1.4, 280 minus net identifiable asset acquired 1300. So therefore goodwill 260. Okay. There is a note, acquisition costs are not included as a part of the fair value of consideration given under IFRS 3 business combination. And then the next, up to this IFRS 3. Now IAS 36 will take the charge. Calculation of impairment loss. Unit before allocation of goodwill, then allocation of goodwill, carrying value after allocation of goodwill, recoverable amount, and impairment loss. Now look at this, because this question students have asked me, sir, why this is 400 here? It is 450 in the question. What we have learnt, if you can calculate the recoverable amount before providing goodwill, before allocating goodwill, first calculate impairment loss before allocating goodwill. Is it right? So 600, 550. Before allocating goodwill only, this is impaired. 400. After writing down asset in the individual CGU to the recoverable amount. 400 is understandable. And then goodwill allocation. Total goodwill is 260. 260 in the ratio of 2:2:1. Check the calculation. 104, 104 and 52. Total carrying value after allocation 704, 654, 452. Recoverable amount 740, 650, 400. This we have already adjusted here. So this impairment loss 52 will be there after adding goodwill. What about this asset? This asset recoverable amount is more. No impairment loss. Here the recoverable amount is less. Hence impairment loss of 4. Here recoverable amount is less. Hence impairment loss of 52. Now where will you allocate this 4? First towards goodwill. Is goodwill sufficient here? Yes. This 52, of course it will go to goodwill only. The asset was already impaired. So now my total impairment loss towards goodwill will be 56. And towards the asset would be 50. 50. 450 minus 100. So the next question was, what is the total impairment loss? The total impairment loss will be on goodwill 56, on asset 50, total 106. Carrying amount of goodwill after impairment loss 260 minus 56, 204. Okay. And then there is one more question. How this impairment loss will be allocated? So goodwill impairment loss is how much? 56 into 20%. Tell me how much is that? Oh, total impairment loss 106 into 20%. 21.2 will be allocated to NCI. For goodwill, they will allocate 20% of this, and for asset, they will allocate 20% of this. So NCI will be hit 21.2 because all these assets relate to the asset acquired from subsidiary company. Okay, these are subsidiary company's asset. So in subsidiary company, NCI is also 20% stakeholder. So NCI share will also reduce by 20%. No, C is the asset of Pluto Limited. Now the last part of this wonderful chapter. Major differences between IAS 36 and Ind AS 36. There is no major difference. There is only one small difference. Impairment of investment property. Now, what is the difference in the treatment of investment property under Ind AS and under IFRS? Ind AS says only cost model, whereas IFRS says fair value model also. So, paragraph 2F of IAS 36 provides that this standard is not applied to accounting for impairment of investment property that is measured at fair value. But why this paragraph is not there in the Ind AS 36 or Ind AS 40? Because Ind AS 36 does not contain this paragraph, because Ind AS 40 does not allow you to carry the investment property at fair value. Only cost model is allowed. Now this chapter is over.